Are you preparing for a test, a job interview, or just curious about how financial statements actually work? The world has made a very simple concept very complicated, and we're here to the rescue. Let's get right into it. Whenever a company is started, whether it's selling chocolates, software, cars, or literally anything, it is bound to file financial statements. Think of it like a report card, but for businesses. Now, there are 3 major financial statements you need to know, plus some extra notes attached to them. The format stays largely the same across companies, except for banks and investment firms, which are a whole different beast. We'll cover those separately. The 3 statements are the profit and loss statement, the balance sheet, and the cash flow statement. Sounds intimidating? Trust me, it's not. Let's break them down one by one. The profit and loss statement, or the P&L. Think of this like your personal monthly budget, but for a company. It tells you, did this business actually make money or lose money over a period of time? Here's how it works. Let's say you start a chocolate business. You sell chocolates and make $10,000 in sales. That's your revenue, how much money came in from selling stuff. Now, you had to buy cocoa, sugar, milk, and packaging. That cost you $4,000. You also paid rent for your kitchen and shop, another $2,000. Those are your expenses, what it costs to actually run the business. $10,000 minus $6,000 in expenses, you're left with $4,000. Then the government takes its cut. Let's say $1,000 in taxes. You're left with $3,000. That's your profit. If the numbers were flipped and expenses were higher than revenue, that's a loss. Simple as that. Revenue to minus expenses to minus taxes to profit or loss. One key thing to remember, the P&L always covers a period of time. So it'll say something like April 1st to March 31st, or January to December. It's never just one day. It's always a journey from point A to point B. Now, the balance sheet. If the P&L is a journey, the balance sheet is a photograph. It freezes the company at one specific moment and asks, okay, where do things stand right now? That's why you'll see a P&L say, for the year ending December 31st, but a balance sheet will say, as of December 31st. One tiny word, as of, makes all the difference. Let's use our chocolate business again. You bought a chocolate tempering machine for $5,000. Those are your assets, everything the company owns. Now, how did you get them? You took a $3,000 loan from a bank. That's a liability. And you put in $2,000 of your own money. That's equity. Write this down. Assets equals liabilities plus equity. It always balances. That's literally why it's called a balance sheet. This one equation is 80% of understanding financial statements. Last one, the cash flow statement. And this one's a game changer. Here's the thing. In the business world, just because you made a sale doesn't mean you got paid for it yet. Imagine your chocolate business lands a big order from a supermarket chain. They say, love the product, we'll pay you in 60 days. You've made the chocolates, delivered the boxes, and the revenue shows up in your P&L. But the cash? It hasn't hit your bank account yet. Meanwhile, you still need to pay for cocoa, pay your staff, and keep the lights on. That gap between when you earn and when you actually receive money, that's exactly what the cash flow statement tracks. It answers one very important question. Did the business actually generate real cash, or was it all just on paper? Because a company can look very profitable on paper and still go bankrupt because they ran out of actual cash. It happens more than you'd think. The cash flow statement has 3 parts: operating cash flow, cash generated from the actual day-to-day business, collecting payments from customers. This is the most important one. Investing cash flow, cash spent on or received from investments. Buying a new tempering machine, selling an old machine. If you're spending here, it usually means the business is growing. Financing cash flow, cash from loans taken, loans repaid, or dividends paid to shareholders. Basically, how the company is managing its funding. If this helped you, drop a comment below, share it with someone cramming for an exam, and subscribe to Investor Site. We keep things simple around here.